profiting, Mr. Mike. Market is profiting. Yeah.
Yeah, that's good. That's good news.
Yes, sir. Yes, sir.
Right. I think we can as well wait 2 to 5 minutes if ever there's anyone who's going to join so that they don't miss anything. Did you catch this one? Hmm?
The boom 500.
Crash.
The boom 500.
You didn't catch it?
Yes. I mean, in that one. Yes.
Oh. Right. So let us start with Crash 500. Crash 500, we've been preaching about it. We've been talking about it for weeks and weeks and weeks and weeks, talking the same thing over and over and over and over again. Analyzing the same thing over and over and over and over again. But it seems some people, I don't know why they are not making money. Because at the end of the day, if you're not making money, you have to give us reasons now. You have to give us solid reasons why you are not making money. If ever you're getting information like this, then you don't make money. You must tell us what's wrong with you. So, Cash 500, you can see this was a bearish order flow. This is still overall, it's still a bearish order flow. Overall, it's still a bearish order flow. Remember, once we now have a major lower low is this low, the low that broke, that managed to break internal structure. Which one is internal structure? Was the previous lower high here was broken by this low. So this low that broke that internal structure on a high time frame, that's our major lower low. Once you know the major lower low, market must go up. And going up is simply going up either to create a lower high or to actually change the overall order flow. Where is it going to change order flow? If ever it reaches and breaks this lower high, if ever the market comes all the way and breaks that lower high at the top there, it would have shifted bearish order flow into bullish order flow. Right. So currently we are pushing up because we now have a lower low to create a lower high. And where did I say we're expecting a lower high? I first gave this point, and I also gave another point, which was this one. They said between one of those two supply zones, one of them, the market is going to prefer one of them, either it will choose this one or this one. And according to experience, I'm looking forward to this one because this one, they will just take this out, and come and eventually get into that extreme one rather and give us our lower high. They want to know if the lower high means it must go down. So it's just a repetition over and over and over and over again. So once you know if our lower high, the market must drop down and come and break this lower low. Right. So once we've realized what we're expecting on the daily, Going down to lower time frames, you're simply going down there to identify an entry point that is compatible with what you've seen on the daily, right? Let me delete this. So right, so we now have a major lower low. We are pushing up to create a lower high. That is the only reason why we are pushing up. First entry was after the break there. Break and retest were in demand. There was the demand here. It was actually retested twice. First touch and second touch there on this demand. This demand, the market came back. First touch, second touch. Those were buy entries there. And if you remember, if ever you remember, and you have been following our sessions, you know that we actually gave a buy signal for this buy here that started here, and the TP was here. This buy lasted for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, almost 11 days of holding this buy from where we entered there. So here, then we got this break with this other. This is actually this is not a change of character, but actually a break of structure. This is actually a break of structure because the change of character is that first one. That's the change of character. This one is the break of structure. This one, this is the change of character, like this, because the character changed from this internal bearish to internal bullish. So after the change of character, we'll pull back. After the break of structure, we'll also pull back. So now, after this break of structure, we first to drop the first time. And remember, whenever you're doing all this, you always have zones that you mark, that you expect price to reach. And so here, let me just remove this. Right. So going down to 4 hours now, because I want more details for this trade. That's the only reason why I'm going to 4 hours. Details that the daily might not show me, 4 hour can actually definitely show me. Right. So on the 4 hour, remember, let me remove this. Right. Remember, we now have a major lower low, which is this low here, right? So after that, we managed to change character. After changing character, we came back to this one, which we marked based on the day. If ever you're only looking at the lower time frames and not looking and not going down to higher time frames like the daily, you're never going to identify this zone properly. Most of you're never going to identify where this zone was. If you check this zone, you're only going to see it if ever you actually scale it down to the highest time frame of the day. That's why I always encourage you to always do a top-down analysis, because there are details that the lower time frame might not show you that are there on the higher time frame, which you might actually miss out. You might actually miss so many big opportunities because of that. So this entry, we entered this buy. We entered that buy. After entering that buy, my TP was actually all the way there at the top there. So this was a buy that was actually very successful. So according to internal structure, this here was our higher high. Let me mark it in a different. Okay, according to internal structure, right? This high that changed character. This was the higher high. This one higher low. This one was also a higher low because on the daily it actually failed to break this low. So this was higher low, internal structure now. So from there, whatever was happening in between here, this is internal structure, which was not necessary, which was unnecessary noise there. So now, from here, once you buy from a low, your target must be a high. Once you buy from a low like this, which is a higher low, the target must be the higher high, right? So let's follow internal structure. As you follow internal structure, you realize that this high that broke structure now. The structure was broken by this low, and that highest point before the market changed character to go down. That's our new higher high because it's higher than the previous high. Which one is the previous high? This one. So it's simply a bullish order flow market currently. bullish order flow, which is actually a retracement of that overall bearish order flow on the daily. So high, high, higher, high. So meaning whatever, even if it comes down, 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 whatever is going to do except to break here, remember our final target to the upside hasn't been reached, which is this first zone. The first zone final target hasn't been reached. So all those things you don't see them if ever you're only looking at a lower time. You will never see them. If ever you're only trading small time frame, there's nothing wrong with trading small time frames, but there's something wrong when you only look at lower time frames and you don't consider the high time frame, because there are zones that you see on the high time frame that if you are only looking at lower time frame, you might not see those zones. So here now, I have two zones now that I'm expecting crash to come to. This one, this demand here was retested. No need for us to take that one. This second demand here was retested here. No need for us to. So I have this zone here. I have two zones actually. That demand, this demand here, and also this order block. Why is that candle in order block? Remember, I told you about the different kind of order blocks that we have. You might have it as a last bearish candle before the move up, or sometimes it can actually even be a bullish. It can actually be a bullish candle, but a bullish candle that actually wiped out the lows of the candles, the candles to the left and as well as to the right. The wiping out of the candles to the left, the lows of the candles to the left and the right, that one is what makes this an order block. So you might discover that the market can actually come and take out this level here, this demand here, and tap into this zone, which is actually where my final target for crash 500 is for this particular sell. So that sell that we took, if ever you're following this internal order flow is bullish, but we're actually taking a sell trade. Why? Because we know what we're doing. So long you know what you're doing, you can take either buys or sell. In any market condition, you can take buys or sell. So long you know what you're doing, you know what is happening, you know the situation that is happening on the market. So now, this one, the entry criteria for this was simply number one. When we're in a bullish order flow, once we have established a higher high, the market must drop. And in its dropping, it doesn't just drop in a straight line. It first changes character. Changing character, the purpose of a change of character. What's the purpose of the change of character? Just in case you didn't know. This going up here, this is bullish order flow, right? And in order for it to go down, it has to change this bullish order flow into bearish order flow. And in order to do that, it has to change character. That's the purpose of this change of character. Simply to change a bullish move into a bearish move. It doesn't go in a straight line. That's why you see it comes, changes character, then comes back. Coming back, it's simply coming back initially where most of the orders of the institutions were placed there. That's where they sold there initially, right? Initially they sold there and they changed character. After changing character, they come back to retest that level and pick up some of the guys that are left behind and also take out all the liquidity that is there. Where is the liquidity here? Liquidity here was in the form of trend line, where the trend line there. Those that are part of the class, you know that we spoke about the different kinds of liquidity. Trend line liquidity, we have double top liquidity, we have all kinds of liquidity that we spoke about. So here, trend line liquidity was the one taken out. This was the trend line, and that's the change of character. And after the change of character, the market came. Can you please unmute your mic? I don't know who's making noise. Whoever is making noise, please mute your mic. So here, there are stop losses here. There are stop losses here. And there are also stop losses here. So that them taking out this, and this, it's actually taking liquidity. And if ever you're in the class, you know what is that liquidity is actually fuel that the market makers, the institutions use to move price wherever they want to move. It's actually a form of fuel that they use. So here it was simply a grab of liquidity, taking out liquidity and us also tapping into any untapped zone. Yet they tapped into this zone earlier. There was no reason for them to come back and tap there. They were simply going to continue going down, 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 down. If ever they they had tapped into this zone earlier like this, they were simply going to continue going down without retesting. So here, this was our entry. It was based on this supply or order block that is there. So that order block in supply was the entry criteria and also the reason that I mentioned. And the target is this level here because of also the reasons that I mentioned. So once it reaches here, we're expecting the same thing that we used to enter here. We're also expecting it. So here you can enter in two ways. Either you can enter immediately after the candlestick rejection, the candle rejects and fills above the zone, you can actually start buying. Or you can actually go to a tiny time frame or a small time frame like your 15 minutes. Once you go to your 15 minutes, and once you get something like this, which is a change of character. Because remember, when the market is going down on a lower time frame, it will actually be forming lower highs, lower lows, lower highs, lower lows when it is going down. So once it breaks the previous lower high like this, break of that previous lower high, pulling back into any demand, pulling back into any other block, that will be your buy criteria instead of someone just entering because of it tapping into a zone. So there are two entries that you can enter. Either immediately after the market taps into the zone and rejects, you can actually start buying, or you can wait for this move on a 15-minute time frame or 30-minute time frame. Once you see this move happening, you can actually enter your buys as well. So personally, what I do two things. Immediately, if ever it enters the region, I can enter a conservative buy. Why a conservative buy? Because the market can still play around before going up. Right. So after now I have this. After I now have this on a 15-minute. Once I now have this on a 15-minute, that's when I can go aggressive. Go aggressive where I'm going aggressive here upon the pullback. Why am I going aggressive? Number one, the order flow, current order flow, overall order flow, current order flow here. It's what? It's bullish. Current external order flow, which is this one, right? It's currently bullish. And also this one, this internal order flow, which is this one, it would have also turned bullish after this change of character. It's now also bullish. So this factor, when I have bullish, it actually makes this trade a high probability trade. Actually, so this trade, if you ask me, is it a high probability? Is it a low probability? Is it a medium probability? If you ask me, I'll tell you that it's not a high probability trade. It's actually a medium probability trade. Why is it a medium probability trade? The fact that we are still in a bullish order flow market. Higher highs, higher highs, higher highs, higher lows, higher highs. We're expecting a higher low. We are still in a bullish order flow market. That's why it's a medium probability. It's a medium probability because we had this change of character here. They did not give us a change of character. They did not give us a change of character. This one, and someone took sales above there before the change of character. That one is a low probability. It's a low probability because the external structure is bullish order flow, and also the internal structure is also bullish order flow. So, and you take a sell, whilst the external and the external and the internal are all bullish, and you take a sell. That's a low probability trade, and the probability of low probability trades winning is very low as well. So this one is a medium probability because we have a change of character. This change of character has changed this internal order flow into bearish order flow, right? But we are still in a bullish order flow in this external structure. External structure, this one is bullish, but internal, we are bearish. That's why we took that sell. Medium probability trade, it's also a trade. So remember, once you come here and do this change of character, what on a lower time frame, 15 minutes, you can actually enter your buys. That's a high probability trade, high probability because of the reason that I spoke about. So no need for me to go down to lower time frames. Lower time frames are there for you to, for example, let me do this. Cash 500. There are two things now that might happen. If ever you didn't enter there at the top, if ever you didn't enter at the top there are two things. There's another entry that one can actually get, which is actually the internal entries, entries that are based on the internal change of character, which is this one. This is an internal change of character because remember, as it was going up, it was forming high highs, high lows, high highs. So this was a bullish order flow going up. So now for it to not go down, just also change character. Can you please mute your mics? I don't know who's making noise. Come on. All right. So after this change of character there, after the change of character there, like this one, change of character, where did this move start? It started from this zone here, from this supply zone here, right? So we shifted this move here, which shows we've shifted bullish into bearish. So after that has happened, chances of the market pulling back, so it can actually even come down and pull back here. This other entry now, also another entry that someone can enter if ever they didn't enter this initial sell. If ever you didn't enter this initial sell, you can also enter if ever you get the pullback into the supply. Once you post back there, you can actually sell there as well. Then it continues going. Right. So that one is also a highlight for those that are quick to shift their stop loss to entry. Because if ever the market isn't came back to retest or to mitigate or to whatever you want to call it, a supply like that, if ever it doesn't come back to retest and you quickly shift your stop loss to break even, you discover that the market will come, take you out because you put on break even, then boom, drop all the way to your take profit levels, just because of the simple reason that you quickly shifted your stop loss to break even before even before the market had actually moved and actually retested and mitigated all the significant zones. So that is it for Crash 500. Moving on to Boom 500. So whatever I'm doing here on Crash 500, Boom 500, you can do it on any pair that you want. Any pair that you want, you can do the same. So Boom 500, Boom 500, we have we also kind of have the same, almost a similar situation. Almost, I can say a similar, almost similar, right? Almost similar in the sense that if you look at this external structure, that was a lower low, right? Lower low there. That was a lower high, right? Remember? So after that, which other low broken internal structure was this one here? So this is our new lower low. Once you now have a new lower low, it means the market must push all the way up. Pushing all the way up is simply pushing for the reason of establishing a lower high. That's the only reason. Either establishing a lower high or changing the overall order flow. Because when it's like this, order flow, external order flow, external structure order flow is still bearish, right? So here, I now want to target the zones that the market can pull back into, because this will be considered as a pullback. This one is a push because we are going down. Push, pull back, push, pull back. That is what happens when you're in a bearish order flow. The push is to the downside. The upward movement is simply a pullback. So there, that's the zone that I'm expecting. And also this one I'm expecting to be broken. This one I'm expecting to be broken because they can actually take out the liquidity that is lying above this zone here and actually tap into this one. Why not this one? This one was retested, this one was retested, this one was retested, not retested. So mostly they can actually come into a zone like the one that I'm expecting. So if you check Boom 500 and Crash 500, they almost have a similar chart movement if you look at it closely. So those are the two zones that we're looking at, right? After a change of character, remember we always must pull back into a significant zone, then we continue going up. So here the significant zone that I was looking at was this demand here. This demand was never retested, right? If you look at it, these other ones, all the other demands below this one retested. This one retested. No need for it to come down here. this other one, retested. So the only unretested one is this one, which is where the target for actually these cells is, according to me. As from the signal, obviously I gave the target as this one because signal people, they also differ now in terms of understanding how they understand market structure and everything. So that might also affect how one can check even the signal. So that's why I even put sometimes the take profits closer so that those that do not have enough understanding, they'll just make money. They'll just make money from that little movement that would have happened. So I've marked my zones on the daily. I'm going down to a 4-hour time frame. 4-hour time frame. It's simply going down there to identify things that I'm not seeing on the daily. Like things like what? Like this change of character here. This change of character here actually changed this bullish order flow into bearish order flow. This bearish order flow is simply happening in order for us to have a higher low. And here, if you ever want to refine our zones, this is the zone here on 1 hour, on 4 hour. This is the demand. Here, this is the demand, right? So that one can be our first target, this demand. Second target is this one, right? So this is what I'm looking forward to now. And also, if you want to add other confluences, people, they think me not putting trend lines, it means I don't understand them. Come on. These things, I know them by head. I actually know where a trend line is and I know where a trend line is not. So me not putting them, it doesn't mean that I don't know a trend line. I know them too much to understand that I don't need to put them. I know them too much to understand that I don't need to even put a trend line. This trend line that I'm simply putting for someone who might want me to be putting the trend line. Not for me. Me personally, I know that the trend line is there. So yeah, first touch, second touch, third touch, which is obviously we're expecting now to drop, especially also after this change of character, we'll put back into an extreme supply. This zone here, we actually took some sales, made money up until the zone was broken, because most probably of the concept of premium and discount prices. Remember, they favorably like to sell in premium prices and buy in discount prices. So this one was a premium price more than any other zone below here. So that is a very beautiful zone to sell, because internal structure now, you can see this a high, that's a lower high, lower low. So this can most probably be a lower high. What makes that a lower high is the break of internal structure. Which one is the internal structure? Once it breaks this internal structure, it qualifies to be a lower high. Once you now have a lower high, market must go down. So here, once we break here, confirmation, market must go down, come and break this one, establish a lower low. Once we have a lower low, maybe that's when you can also pull back up, come down to this final level, then eventually break this internal bearish order flow into bullish order flow, since we are still going up according to what we saw on the daily. Right, so this is what I'm looking forward to on boom. So which means our opportunity zones, opportunity zone here, opportunity zone here, maybe an opportunity zone here, opportunity zone here, and also an opportunity after the break and retest here. So I'm looking at 5 major opportunity zones for this whole month of June. This is what I'm looking forward to on 500. All those zones that I marked, those are zones of opportunity. Anywhere in between, you need to know what you're doing. If you take a trade anywhere in between these zones, you need to know what you're doing for that trade to actually make you money. You need to be thoroughly vested in terms of the knowledge and the understanding of what you're doing. So guys, that was it for Clash 500 and Boom 500. Anyone with a question before we close? Any question?
No questions here. I just want to say thank you. No questions. No questions. Just looking forward to the positive entries, Baba. Thank you, Baba.
Wonderful, wonderful. Others, anyone else with a question?
Thank you. Thank you. We'll ask questions next time. We are still learning bit by bit.
Okay, okay. So guys, that is it. If ever you didn't understand what I said, I'm going to make sure that I upload this video on YouTube. Go back and watch again up until you understand. Then when you develop a question and you have a question, you then ask after rewatching and rewatching. So guys, thank you. See you in our next Zoom session. See you in our next Zoom session.